At the moment, we can read titles like Bitcoin falls further as China cracks down on cryptocurrencies and Bitcoin crumbles below $40,000 on China crypto warning, and so on. So is Bitcoin just a mania that is collapsing because it's based on nothing and nothing is worth nothing, or is there something else to understand? This is a question that must be fundamental to you because how you feel about this collapse will tell you a lot about how you approach investing. Come on, let's go. Is China killing Bitcoin as a press seems to strongly suggest? If we go back to the source of the evil, the decline of Bitcoin is due to a joint declaration of 3 Chinese organizations close to the Chinese government. The National Internet Finance Association of China, which deals with the regulation of internet finance, the China Banking Association, in charge of the regulation of banks, and finally the Payment and Clearing Association of China, which is still a governmental organization linked to the banking system in China. And what did they say? I have to tell you that I had a hard time finding the original source of words coming from China because obviously in journalism, it is not worth giving the source when it comes from China. I struggled to find it, but here it is. I put the link in the description. It is a joint statement published on the Chinese version of WeChat, which is one of the most used social networks in China. If, like me, your Chinese is a bit rusty, take the source, paste it in DeepL, and you'll have a usable translation. Basically, they made a joint statement to remind financial institutions of all types that touching Bitcoin is wrong. The original ban was made in 2017. China banned local exchange with a whole series of prohibitions for its banking and financial sector. This is when Binance, which was originally Chinese, moved to the US to become the huge success it is today. There's nothing new under the sun. This is just a reminder. Since 2017, China has regularly been blowing hot and cold. Conversely, one could have interpreted this communication as a desire by China to bring down the price of Bitcoin so that its population can put a little more in their pockets, which would strengthen the weight of the digital yuan, if a large quantity of Bitcoins, which would be seen as a monetary standard, were held in China. This hypothesis is no more foolish than any other because we simply don't know anything about China's intentions. But then, how can we know what to think? I know that I don't know what China or Chinese banks think, but I do know that the various central banks in the world, led by the FED and the ECB, have already had this to say about Bitcoin without it disturbing the fundamentals of Bitcoin. In essence, what is the promise of Bitcoin? Create a value exchange and value storage system with a higher degree of trust purity than currencies managed by central banks. Note that in this promise, I'm not talking about Bitcoin as a currency because Bitcoin has no more in common with cryptography than it has with currency. It is just different, even if some of its features overlap with some of the functions of traditional currencies. Bitcoin is still a decentralized token that has its own blockchain. Check out this video to see what I mean by that. So the biggest attack that we can imagine on Bitcoin is an attack on the mining to try to destabilize its security, and in second part, an attack on the exchanges to try to prevent it from being exchanged. An exchange is a site where Bitcoin or other decentralized tokens can be exchanged for others. Banning Bitcoin from banks is a bit like banning alcohol in Muslim countries, if you will allow me this metaphor. We know that there is alcohol in Muslim countries, but if you want to bring down the booze industry, I don't recommend starting there if you want to have a significant impact. In a very pragmatic way, I know that Chinese people in China know their country and their government very well. So in a case like this, I tend to look at what the Chinese miners are doing and not what they're saying. It is also the miners who are at the heart of Bitcoin's business model. So if Bitcoin is doomed, it is the miners who should be the first to go. And luckily, it turns out that we can measure mining activity. Mining Bitcoin is about earning a living by actively participating in the security of the network by running computing power. Now we know that 60% of Bitcoin mining is located in China, and that until now, the Chinese government has never attacked Bitcoin miners, contrary to some nonsense that may have been said. So if China wants to put obstacles in the way of Bitcoin, it is not banks that should be banned, since today there are very few banking services on Bitcoins. No, what I would do to attack Bitcoin if I were a pissed off Chinese ruler is to go after the Bitcoin miner in the countryside. In that case, I would directly seek to weaken the security of the network to demonstrate that Bitcoin is a sham. On the other hand, the Chinese miners would know about it very quickly, and we would see the mining farms in China die out very quickly. And this can be seen in an indicator called the hash rate, which is tracked in real time. Basically, the hash rate is a difficulty of mining Bitcoin. The more expensive Bitcoin is, the more competitors there are to mine Bitcoin, and the higher the hash rate. Conversely, when Bitcoin prices fall, miners go bankrupt and the hash rate falls. Well, on the hash rate side, we don't see anything unusual. There are some decreases at the moment, but they are due to the shortages on the semiconductors which are used to make the ASIC's cards, which are used for mining. We can see it very clearly on the price of the material, which has virtually exploded. And I can tell you that the serious miners in place are rubbing their hands at the moment because there are places to take. In short, if the Chinese miners sense the police coming to their door, we can think that they would have unplugged their machines and moved to another country. It is therefore a monstrous movement on 60% of the hash rate that we would see here, not to mention the turmoil that this would have caused on a global scale. However, this is not the case. In fact, nobody is talking about mining right now. At this point in the discussion, you're going to say, yes, but the price of Bitcoin is collapsing. Isn't that a fact? Well, that's debatable. Like any asset, Bitcoin has volatility. Its price goes down and up around a trend. On the SP 500, the US market for stocks, the volatility is about 1% per day, to put it simply, and 20% over the year. If we consider that the SP 500 gains on average 12% per year, then you can make a ratio between the volatility and the return. This ratio is called the SHARPE ratio. I'll skip the details, but for stocks, it is generally between 0 and 2. When the SHARPE ratio is at 0, it means that the profitability of your asset is not worth the risk of volatility. Between 0 and 1, which is common, it means that to compensate for the volatility, you will have to wait several years for the return. For example, if you have a 3% return but the annual volatility is 10%, you won't know if you have made money or if your performance is just due to the market. Above 1, you should have an annual performance above the market rumblings. In the end, the SHARPE ratio makes it possible to evaluate the amount of volatility of an asset in relation to its return. This ratio is associated with a measure of risk by financiers in the markets. To illustrate, you can draw a path around the long-term trend of a financial asset to see that the prices are moving in this path most of the time. This is called a standard deviation. Here's an example with the SP 500 in Naster. I display the historical regression, which allows me to draw the long-term trend around which the SP 500 oscillates. Then I switch to the log scale in order to visualize the price oscillations over the long term. In fact, we can see that the SP 500 oscillates around its long-term trend. Then I display the standard deviations, which gives a probability of return to the long-term trend. The more the price moves away from the trend, the higher the probability that it will go back in the other direction. So you have to buy between -1 and -2 standard deviations to buy when it is not expensive, and vice versa. On the other hand, if you are lucky enough to see a deviation of more than 2 standard deviations to the downside, it means that either your asset is dead, it has gone bankrupt, or that it is really discounted due to an exceptional situation. Otherwise, at more than 2 standard deviations, you are either in a revolution, the reality is changing, or on a very overpriced asset. That's how I know that in the markets I have to be very selective today, because the SP 500 is pretty expensive right now without being in a bubble. With this whole standard deviation and SHARPE ratio thing, let's look at Bitcoin. Well, Bitcoin is blowing away all other asset classes, be it gold, stocks, or bonds. In other words, if you consider volatility to be a risk, as many financiers do, then that makes Bitcoin the least risky asset in the world. And that's a twist. I don't think you saw that one coming. Furthermore, if I plot the same long-term trend with the standard deviations on the price of Bitcoin, here is what we get. And yes, it's the same with Bitcoin. It oscillates around its trend. Rarely does it exceed 2 standard deviations, but that eventually sends it back to its long-term trend. And today, if we zoom in, well, Bitcoin is just bubbling around its long-term trend. In other words, given its peculiar characteristics, Bitcoin is priced in a range between $23,000 and $217,000. Even more surprising. According to its way of looking at things, as long as Bitcoin is not above 664,000 or below 7,600, which is more than 2 standard deviations, then it's not excessively overpriced. That may sound crazy, but keep in mind that over 10 years it has a performance of 164%, which is crazy in itself, but that's just the reality. So as far as a variation from 60,000 to 30,000, we're just talking about nothing at all. It could very well be an epiphenomenon that doesn't matter and may not even have an identifiable cause. It could just be market noise, the simple action of volatility. These stories about China or Elon Musk or whatever probably have no impact on the value of Bitcoin. It's like Google stock going from 2,200 to 2,100. Who cares? But by that logic, you're going to say, come on, it's not possible. At this rate, Bitcoin will be worth more than all the gold in the world in a few years. That's an unsustainable rate of growth. And that's exactly right. This growth can mean 2 things to me. First possibility. We are on a bubble that has been going on for 10 years, and it will end in blood once Bitcoin is worth $0. This is a TULIP mania scenario. The second possibility is that Bitcoin is a revolutionary asset in the sense that it will disrupt society as did the invention of electricity. Under the impetus of decentralized tokens, with Bitcoin at the forefront for the time being, our societies will move from a hierarchical to a decentralized structure with all the consequences that this implies and what we find hard to imagine. In this case, Bitcoin is an anti-fragile asset that feeds on crisis to grow rapidly because it provides a solution to the crises we face. And then, if it is indeed anti-fragile, it will continue its crazy trend until a new economic and social structure is put in place. Once a revolution takes place, decentralized tokens of any kind will be the assets best suited to this new world. That's what becoming fragile is all about, to be the animal best suited to its environment. Its performance will be rationalized at that point to join the performance of the economy. This story of anti-fragility is nothing more than the story of destructive creation theorized by the economist Joseph Schumpeter. The thing about these situations when you experience them from the inside is that you think the world is going crazy and that it's in the grip of a gigantic bubble. That's just a position you have to take. Is Bitcoin a tulip, or is it coming to revolutionize the world? There is little room for middle ground scenarios as its growth is far too strong for a lukewarm scenario. Personally, since I'm not suicidal, I tend to look for the best of both worlds. I don't know if Bitcoin is anti-fragile or if it's a joke. However, I do know that if Bitcoin is the next revolution in the Internet of Value, then I had better get in on the ground floor because the potential gains are immense in this case. If Bitcoin goes to 1 million in a few years, I will have multiplied my stake by 33, at 30,000 a Bitcoin. If Bitcoin disappears, I lose everything. So if I bet 3% of my wallet on Bitcoin, I can double its value with Bitcoin alone. If I lose everything, I lose 3%. It's all about what you're willing to lose. So personally, I don't give a damn about Elon Musk or the opinion of the Chinese banks. Finally, if Bitcoin is indeed a disruptive revolution, will the governments just let it happen without saying anything? Of course not, because that would mean at least a profound reconfiguration of monetary power. In this case, the struggle will be hard and ruthless. All I'm saying is that today we're clearly not there and that it's up to us, the simple investor, to be clear about what Bitcoin means to us. Then, time will do its job. And on that note, see you soon for new videos. Ciao!
Thank you so much for watching. If you like my videos, please subscribe and don't forget to hit the bell if you want to be notified of the next episode. And if you want to invest in the stock market over the long term or diversify your financial portfolio, I'm offering you an analysis of the 8 European star stocks to have. Thanks again for watching and have a great day.